Now let's bring in our market experts, Jim Lacamp, RBC Wealth Management. Jim Lacamp, it looked like for a while the plunge in the dollar was really good for, not for oil yet because it's got its own special problems, but very good for commodities, basic materials, gold, metals, and mining. Now, today the dollar stabilized, if only for a brief day, and basic materials and commodities sold off. But is your thinking colored and tempered by this new weak dollar trend, and does that cause a new stock market strategy?
It sure does, Larry. If you look at the number of groups that are moving out there in the marketplace right now, the positive groups are littered with metals types names, whether it's gold, steels, any kind of basic materials, metals. And there's also a little bit of a global growth story going on. That's why we're seeing the dry shippers and the fertilizers start to improve too. These are the same groups that were doing well 2 years ago when the dollar was falling. So yes, there are new themes that are redeveloping in the stock market.
All right, so then Jack Gage, you don't buy any of this gloom and doom, right?
I don't.
You believe in the mustard seed concept, and you're an outright bull. Tell us about it.
I do. I say bring back the 11 handle on the Dow.
11, as in 11,000.
No question.
Whoa.
Look, when you zoom out from this, what we have right now is the market, the S&P is trading at 9 times 2009 earnings. 2008 is going to be one of the easiest comps we've had in a generation. I think it's very attractive right now, and I think what's going to lead us out of it is consumer discretionary stocks. Part of the reason is that oil tax cut.
That's been our mantra.
Absolutely.
That's been the mustard seed mantra.
Look at retail sales. Ex-autos is down 1.6%.
But
gas stations are down 15%. That goes right into consumers' pockets.
Core retailers were actually up 0.5%.
Right.
What about this issue now? Just nice just to talk to someone who's an optimist for a change. It's very nice. Just what about this
other... You gotta have a job first.
Hang on a second. What about the idea that profits are going to improve? Because what you're seeing is prices paid by companies have come way, way down because of oil and commodity drops. But prices received, I mean, consumer prices are slowing, but not as bad. So corporate profits may benefit. Is such a thing possible?
Absolutely. And I think, look, looking at oil as a proxy for the U.S. economy is kind of like looking at credit default swaps as a proxy for bank stocks. It's not as related, I think, long term. I think you're going to see an inverse correlation where a declining dollar amount for oil is going to incentivize investment by U.S. companies.
Do you hear that, Jim Lacamp? Do you hear that optimism? 11,000 Dow. Forbes magazine. Jack Gage is the name in case you want to email him later. What do you make of that, 11,000 Dow?
It's going to be a long while. My hair may be more gray or gone by the time we see 11,000 on the
You paused a little bit there. I just know you paused just a little bit. Did Gage just shake up your pessimism? Are you back on your heels just for a moment?
No, not at all. I'm a little bullish here. I think we have a market holiday for the next couple of months. I'm kind of bullish here. I'm seeing more groups improve. But deflation is the real problem here, and deflation is like quicksand.
Give me a group. Give me a group. Give me a group. Don't talk to me about deflation. Give me a group that might improve.
Dry shippers. They're oversold, the valuations are fantastic, and they're starting to get letters of credit again so they can start moving product again. And a lot of them have great yields. So this is a group that I think is going to see an oversold bounce.